So here we go, a new week in the stock market, and it's a busy one. We start to enter the last busiest week of the year, one of the busiest weeks of the year. We start to enter earnings season, and there's some big companies reporting earnings this week and into next week as well. These are the two biggest weeks left in the year, and we'll look at what's going on with the week ahead. Now, obviously, last week it was a little bit of a rough week when you look at the markets, especially Monday wasn't too bad, but when you go on to Tuesday, boom, the SP was actually down 3.8%. That's pretty big move in the S&P 500. And then obviously you look at a lot of the smaller caps. Obviously the smaller caps are going to move more than that. And when you look at the small caps, for example, or the Russell 2000, 5.5% down. Yeah, it was tough. And actually, when I looked at my account last week, it was a pretty tough week when I looked at my account, actually. And we'll actually get stuck onto some of the earnings, and we'll see if there's some rebound in the earnings. Maybe if we see companies still doing very well in this high interest rate environment and all these recessionary fears are out there. If we see a few companies that do okay, maybe that will help the market go, we're still doing okay, even though this high interest rate environment is around, we're still doing okay from a company's earnings point of view anyway. So we'll talk about a few of these that are going to be coming up. Just a little bit of a shout out on the Patreon if you are on there. I did just drop an exclusive video once again, which was the Enphase video, and this is an update on Enphase, and I talk about what potentially price I will buy Enphase at, and that price is in that video. And if you want some free shares from Trading2, join through the link in the description. That's the broker that I use, and you can get a free share worth up to £100. But let's look at the companies that are going to report in earnings this week. So on Monday, not too much. We've got Philips that are reporting. Logitech, I probably will check out and see how they're doing. I think they should be doing okay. I think I only read this morning, actually. I believe, I'm trying to remember here from a few hours ago. I believe that they said that new game sales rose 10%, I believe, in this month, which is pretty good. Clearly some of the new titles that are coming through are helping. Probably the likes of maybe Activision. You look at a few gaming companies, they might do very well. A company that I own, Corsair, maybe that helps Corsair with a few sales as well. People maybe upgrading the PCs or maybe buying accessories. So we'll see what happens there. So probably we'll check the Logitech out from that point of view. Tuesday is where it starts getting a lot more serious. On the morning, we've got Coca-Cola that's reporting, Verizon reporting, General Electric, 3M. 3M is a stock that has had troubles in the last kind of 2 or 3 years. But I've got to say, like, you look at a company like 3M, a dividend king, you know, and it's like they're really suffering on a share price point of view at the moment. You know, last year we saw growth stocks collapse, and this year what we've started to see is that we've started to see a lot of weakness in every single name starting to show a lot of weakness. One or two are still holding up okay, but a lot of stocks are showing weakness. And dividend stocks, you know, last year we didn't have dividend stocks showing any signs of weakness. That was the safety area, was dividend stocks last year, and most of them are starting to join in now. And 3M being one of those that I look at and go, you know, I've never really considered 3M before, but don't look too bad. I don't think I'll realistically buy 3M because there's just so many of us. There's so many stocks out there that you want to buy at the moment. And I actually mentioned this on on exclusive video this week on Patreon, and I went through on that video. I was talking about my mindset about buying opportunities at the moment, and it's being very selective about what to buy. You know, you can't go out and buy everything out there. So it's kind of like, yeah, 3M could do very well at these prices, but what other stocks could actually outperform 3M at these sort of levels, I guess, really. Spotify are going to be reporting. I was like looking at Spotify. It's a company that I really like. I think it's a realistic platform that will do very well going forward. The only thing I never get around to buying Spotify is I always think the profitability isn't as high as what it should be. For a company that's quite mature now, you know, Spotify has definitely gone past its growth stage. It's more into its mature cycle of its product, and I think that they should be delivering a lot more profitability, which puts me off. So yeah, one of those that is a good company, but maybe not necessarily a good stock, I guess. But Tuesday after close is where it starts really picking up, and we start getting some really good numbers coming on Tuesday. So first of all, we've got Microsoft. Microsoft, as most of you guys know, is a stock I own. It's one of my stocks that I've held the longest in the portfolio now. I've held it in the portfolio for around about 7 years now, which is crazy to say. So yeah, you know, when you talk about, you know, I think a lot of people, when it comes to long-term investing, you go, yeah, I can hold a stock for 5 years. And then realistically, you see after like a couple of months or even a year, people go, well, I don't know if I like it anymore now. And it's, you know, when you actually look at that point of view, it's like, realistically, everyone says they can hold the stock for 5 years, but how many people do own that stock for 5 years? You know, if that stock starts going down, whoa, I'm selling that stock, it's terrible. Or even if like they see some green, all of a sudden, oh, you know, I'm going to sell it for some profit. Realistically, to hold a stock for over 5 years is actually impressive you can do it. And for me, that's actually been one of my longer term stocks that I've held, and was actually my largest position from 2017, 2018, 2019. So it's been one of my longest, my one was my biggest position at one point. And it still is quite a large position when you look at it, considering that I have sold off. I think it was in 2020 I sold off about half my Microsoft position. I think I sold it off for, I can't remember exactly what it was now, but it was quite a big gain, over 100%. So yeah, it's still a fantastic. It's probably one of my hold forever stocks anyway. But the difference is this is one of the stocks that's held up at a good valuation. It's still holding up at a premium, 33 times earnings. Realistically, it's pretty much near 52-week highs at the moment, or just slightly just below it. So, it's buckled the trend in the market where a lot of things are diving at the moment. And it's quite funny, really, because it has had the financials have held up pretty well in this environment. You can see here that the profit and revenue growth has been pretty good. We can see there was a little bit of a wobble last year in the profitability and revenue, where it just went through a bit more of a slower stage and a little bit of a slower profitability. Seems to have passed it all now, but it does show you even Microsoft had a little bit of wobbles in the financials, but the share price, no one wanted to sell it. People were holding that stock and going, I'm not selling this one, which is funny that this is one of the stocks that has been breaking the trend anyway. We've got Google that's reporting. Google, will look at how they're doing, being on a bit of a run at the moment. I'm sure most of you guys were aware, I actually wanted to make Google my largest position last year. Came on the YouTube channel quite a few times, said, below 100. If it stays below 100, Google comes my largest position. But the thing is, I need it to stay down for a year for it to come my largest position, because I'll have to average over a longer time frame. And it didn't stay under 90 for a year. It actually only stayed under 90 for maybe around 6 months. So I was able to build a decent position, but it's definitely not my largest. So yeah, a little bit gutted about that. And then since then, it's been on a good run. So yeah, it's funny, you never get credit for the stocks that actually go on a good runs, do you? Hey, Google, obviously that's doing very well, and the numbers actually look pretty tough. There's actually a 20% increase in the EPS, which I thought was a good rebound. Unless we're actually expecting a 9.8, nearly double-digit growth on Google. So we'll see if it hits these numbers. I mean, these look pretty tough numbers from only a few months ago for them to hit. So we'll see. It'll be a good sign that maybe maybe that's driven up by cloud, or maybe we start to see that advertising come back into Google. But yeah, that's a very strong forecast there for them to hit. We've got Snapchat that are reporting. We've got Visa. Visa obviously is a stock that I've owned Visa for around about 4 years, I believe now. Once again, a lot of these stocks here I don't really talk about that much on the YouTube channel, but yeah, it's been a longer term hold of the channel, and yeah, it's done very well. I think I'm up 50% on it, and obviously the big thing we'll be looking at transaction volumes and how they're seeing the amount of transactions at the moment. Obviously, the thing that's helped it in the last 12 months has been cross border coming back massively. So we'll see what happens with Visa. TDOC's a stock that I own as well. Obviously, not as good as the other three. This has had a tough time with a lot of CV comps, but the latest numbers that have been coming out for it have been pretty decent. Not decent enough that I'd buy, but decent enough that I go, I think there's still a good business there. That they can, obviously, I think, when you look at, telehealth, it's still going to be a massive area that's going to grow in the next 10 years. The only problem is that I look at TDOC and I look at HIMS and I go, I can't justify buying TDOC at all, because I've got HIMS over there that are absolutely crushing it, and the money rather going there at the moment. And then not much else on the Tuesday. On Wednesday, we've got Boeing that are going to be reporting. We've got T-Mobile. Actually, I used to own Boeing as well. I think some of you guys might remember. It's one of the stocks that we bought in the CV dip, and did very well for us, actually. T-Mobile, Hilton. We've got Meta that's reporting. Obviously, once again, another stock that I own there that are going to report in earnings. Meta, I mean, this is funny because this is actually going to mark out a year since Meta dived off a cliff. It's going to be a year. So when we actually got the Q3 last year, if you actually look at see here, and then boom, on the 28th of October, boom, $99. So it's going to mark a year since that time frame, and since then the stock is up 211%. So it shows you in the stock market, 1 year a stock can be massively out of favour, and then within a year's time, boom, the stock absolutely rallies huge, and the sentiment around the stock changes. If you ever wanted to know how quickly a sentiment around a stock can change, 1 year. 1 year it can change that rapidly. So sometimes, you can look at some stocks and you go, oh, this stock is absolutely beaten down, it's awful, financials look poor. 1 year, boom, turn around. That's how quick things can turn around for companies. And Meta is that. Obviously, stock once again that I've owned for around about 5 years. I believe I've owned Meta for. Meta overtook Microsoft as my largest position in 2019. And held it ever since then, really. And obviously a stock that I bought during the whole kind of dip during this time frame, and held it on the other side, and is doing very well. Looking at Meta's numbers though, they look very challenging. I was looking here, the average, the year ago EPS was $1.64. They're actually expecting the average EPS for this quarter to go to $3.63. I mean, that looks a little high, a big jump there. So be impressive if they hit those numbers. And growth-wise, I mean, 21% sales growth expected. I mean, that obviously the analysts must be forecasting some sort of rebound in advertising this quarter. Obviously, the big thing that Meta can do to help them is they can show more ads. So they might not see as strong as a rebound in advertising, but they can sneak a few more ads in, and that makes up for the gap. So if Meta hit these numbers, I'll be really impressed. If they can hit these numbers, because this is a really strong rebound. Obviously, Meta is a stock that I own, and I'm up on it a lot. And normally, when you see a rebound like this, you might see me take a bit of profit off the table. I don't want to sell Meta because I think Instagram's untouchable for the next 5-10 years, and I think they'll be very successful. But normally, when you see a rebound like this, and I'm buying in the dip, normally you'd see me probably sell off a little bit out of the position and then use that cash somewhere else. For me, I'm not being really tempted to sell off Meta, because as we see this rebound in revenue growth and the rebound in profitability, when you look at Meta a few months out, the valuation isn't that bad. You look here, you go 36 times earnings, maybe a little bit rich here. But realistically, if you look on a forward PE basis now, it's down at 18, which isn't actually too bad a valuation when you're thinking, well, this company's forecast to grow 12% next year, and they're expecting the EPS as well to go from $13 up to $16. It's not bad at all, really, when you look at it from them point of view. And I'm like, well, I can't really sell it if they're going to do them sort of numbers anyway. And then if we look here, we've got IBM, ServiceNow, a line that's going to be reporting. I actually like ServiceNow. The only thing that I've never bought for is I'd like it a little bit of a lower valuation, but I'll probably just check out them numbers, have a quick read through the earnings. We've got Royal Caribbean, or Caribbean, depending where you're from. UPS are going to report in. A few people will be looking at that and seeing how e-commerce is doing at the moment. And then on the Thursday, we've got a few people that will be looking at Amazon, of course. I'll be looking at Enphase. That'll be the big one that I'm looking for. Enphase, obviously, last quarter had a tough quarter. The stock dropped off their last earnings. But the shining light in their last earnings was actually, if I went on to the 10Q from their earnings, their US business was actually quite weak last quarter. As you can see it, the revenue actually downtrended. The thing that made it not look too bad for Enphase is the international growth, especially the EU growth. That's what they've recently expanded to, and people are hoping that EU growth really does drive up the sales, because obviously you look at the gap between the US and EU growth, it could be massive. And you can see here that the EU growth basically tripled in a year, which is obviously really good amounts of growth. So you thought, well, if it can weather the storm in the US and the EU growth still does okay, they'll still grow at very good rates for going forward. Now the problem is obviously, as you've seen, Enphase dipped massively on Friday because SolarEdge, a very similar kind of company, basically they reported weak numbers, and everyone went, well, if SolarEdge are weak, then Enphase is going to be weak as well. And the worrying thing with when you looked at SolarEdge's numbers is what they said here is that this was Q2. So they said that in particular a strong performance in Europe in both the residential and commercial solar segment, while the US was weak. So they basically said the exact same what Enphase said in those last earnings, what we saw, which was US starting to show weakness, but EU still driving the growth forward. Now, obviously, since Enphase came out with their preliminary results and warned the market they're going to be a little bit weak, if you actually look at the recent quarter that Enphase just put out, that SolarEdge just put out, if you look here, they said that during the second part of the third quarter of 2023, we experienced substantial unexpected cancellations and push-outs of existing backlog from European distributors. So this is the big problem, is that what we've seen is that Enphase have come out and go, we're seeing weak numbers, but the EU is still doing okay. The problem is now that we've seen SolarEdge come out and say that we're now seeing EU decline. So this is the big thing with Enphase on Thursday. We could see them say US is still weak, and now the EU part of the business is also slowing down. And that's where I think we could see a drop on Enphase's earnings on Thursday. And it's like it's one of those where you're at the point of view now where you're looking at that and going, even with the priced in drop of SolarEdge, is it, if you were a bit of a day trader, would you line that up as a bit of a short there? Personally, for me, that's it's risky, it's gambling. But if I was a bit of a betting man, I'd say that them Enphase earnings are going to come in a little weak on Thursday, and I hope they do. I hope they do come in weak because it's a stock that I am watching closely. Intel are going to be reporting as well. A few people like that as a bit of a turnaround play, or they've been saying a turnaround play for about 4 years now, and it's still not happened. Shots fired there. We got Ford that are going to be reporting as well. We've got AAA, Skechers are reporting, Capital One are reporting, and then on Friday, ExxonMobil, AbbVie, and a couple of we've got Chevron reporting as well. So yeah, those are some earnings to keep an eye on there. Obviously, there's a few on the UK as well, which I won't mention today, but these are a couple on the UK side if you are a UK investor. And also, there's a few companies that are not on this list that are going to be reporting as well, because I always get in the comment section about, oh, you on so-and-so, and that's reporting as well, but you did mention it. Yeah, I haven't mentioned it, it's not on the list, but there could be a few stocks reporting. There's a few stocks actually reporting that I own that are not on this list anyway. So yeah, let's see what happens. I'm sure there's going to be a few videos on a couple of these as I report earnings next week. Anyway, hope you enjoyed the video as always, guys. Smash the like button if you're not here, subscribe, and I'll see you in a bit.